Hey, this is Matt from InvestiQuant. Today is Monday, April 19, 2021. And today we saw the markets gap down within the prior session range. And after a little bit of consolidating early on, we broke lower to the downside, and we've been grinding our way lower ever since. So we've got about 30 points of range, which is a little bit better than what we've been seeing past couple of sessions, but we've got decent range. Volume has picked up a little bit as well, so we've seen a little bit of selling pressure today. But what we're going to be doing this afternoon is taking a look at a price-based pattern that's applicable for the S&P specifically, where you're trading below yesterday's low, which is Friday's low. You can see the low here on this chart. Coming in around, what was it, 61.75, I believe was the precise level. But we're above the low from what would be Thursday. That's 2 sessions ago. So we're below Friday's low, the prior session low, but we're above the low from 2 sessions ago, which would be Thursday's low. So we're going to set that up and discover and look at that technical price action pattern there. We'll be using all 4 instruments, and we're going to be using a time-based entry that is entering the market long at 3 p.m. Eastern time, and we'll have to confirm that that pattern is still in play at 3 p.m. Of course, we don't know if it will be or not, but this is based upon where we are trading at right now. So I've got all 4 of these instruments selected. The time-based entry there at 3, the exit set to 4:15 p.m. Eastern time. The opening filter for this, we gapped down this morning within the prior day range, so I added both of those here within the opening filters library. Next, I'm going to add that context around where we're trading relative to the past 2 sessions. So I'm going to go to this intraday close versus daily levels, and this is going to be referencing where the price is at the time of the entry. And we're going to be using 3 p.m. for the time of the entry here. So I'm going to say it is trading below yesterday's low. So I'm going to hit equals for less than prior low. And then I'm going to say it is not trading below the low from 2 days ago, which would reference Thursday's low. So to do that, I'm going to hit the minus sign, make this a not statement. And it's going to say that we are not trading below the low from 2 days ago. We bounced just in front of that area. So now I've got that price action set up here. Lastly, I'm going to put us in a similar market environment, above a 10, above a 200-day simple moving average, and then I can click View Results. And here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time, exiting at the close, which is 4:15 p.m. Eastern Time, when you gap down within the prior session range, and then you push lower below the prior day low, but not below the low from 2 sessions ago. So at 3 p.m., you're trading below the prior low, but not below the low from 2 sessions ago. This is taking place above a 10 and above a 200-day simple moving average. Historically, we've got 67 samples here for the S&P dating back to 2003. We've got 69 in the NASDAQ, 71 in the Dow, 88 in the Russell. And win rates on these are all around 60%, it looks like. So S&P coming in at 58%, the NASDAQ at 62%, the Dow 59%, and the Russell 56%. So all of those at least mildly favored there. If we look at the average win and average loss is a little bit larger in the S&P compared to the average loss. That is also true for the NASDAQ. The Dow, pretty similar in size, no big difference there. And the Russell, the losses have been larger than the wins on average. So the Russell, the only one with the win rate around 55%. The others are a little bit closer to 60%. And the other 3 with win rates closer to 60% have averaged a little bit better on the average win to average loss compared to the Russell, which was a little bit weaker there. So historically, this pattern has slightly favored the longs into the close. Hopefully you found this helpful. Good luck today, and we will see you next time.